Hi guys, it's Stock Curry, and over the past couple of days, we've seen a little bit of a slowdown in the rally. Now the question is, where do we go from here? Well, there's two schools of thoughts on this. We're going to talk about both of them in this video, so let's get into it! The two viewpoints on where the market goes from here are pretty simple. The reasoning behind those arguments, though, is far more complicated. To put it simply, the two schools of thoughts are, one, the market is going to take a little bit of a breather for about a week, and then it's going to continue on its bull run to new all-time highs. The other school of thought is, this rally is a bear market rally, the rally is now over, and we're going to drop down and hit a new 52-week low. Well, that's a pretty big difference between a new 52-week high and a new 52-week low. Those are literally the two most extremes you can have in the stock market. So why are people so polarized right now on where the market's going to go from here? Well, the people who think the market is going to go up are mainly looking at the technicals. And they're looking at the technicals. They see how the market was oversold going into the beginning of June. They saw how the market bounced off of the bottom of a downward trend line going into June. They also saw how the market was forming a broadening ascending wedge, which, as I explained in my VIP Discord, is a bullish technical indicator. They looked at all of these things, and they said the market is about to go on a major rally. And they were absolutely correct. If you look at the technicals today, however, the technicals alone would have pointed to the stock market rally ending on Tuesday of last week. Technically, Monday would have been the top. And then Tuesday did drop, as expected. And then Wednesday, we had the CPI inflation numbers come out that were much better than expected, and the stock market rally continued. The problem is, if you look at the technicals for the past 6 days, the stock market has been overbought, meaning the technicals would indicate that the stock market has gone up too much and needs to come down a little bit. Now, technicals, when a stock, or in this case the entire market, becomes overbought, can be resolved in one of two ways. One way that the technicals can be resolved is if the stock, or in this case the market, trades flat for a certain amount of time. As a stock or this market trades flat, the overbought technicals will start to slowly drop and they will get back down to a normal range. So that's one school of thought. We're going to trade flat for about 2 or 3 weeks. We're going to let the technicals cool off, and then once the technicals have cooled off, we're going to restart the bull run and we're going to get up to new all-time highs. Now, the other school of thought is that we're actually going to start going down. And that's the other possibility, is that we fix the overbought state by having a sell-off. That's the technical side of the argument, and most people who look at the technicals remain extremely bullish on the market. Certainly, if you look beyond the daily and you look at the weekly technicals, they remain extremely bullish, as if we could continue this bull run after a few weeks of cool-off because of the daily being overbought. The bears, the people that think the stock market is going to drop back down to a new 52-week low, are looking at the fundamentals. The bears look at the fundamentals and they say, look, inflation is still at 8.8% year over year. The Fed continues to raise interest rates. Earnings are dropping. Revenue is dropping. More than 50% of the S&P companies who reported earnings lowered their year-end guidance. Only 78% of companies beat earnings, which is pretty dismal considering how low those earnings expectations were. So all of the fundamentals really do point to the stock market turning around and going down to what could quite possibly be a new 52-week low, especially as earnings continue to drop. And keep in mind that as earnings drop, price to earnings ratios, those PE ratios, those rise. And the S&P right now has an average PE ratio of over 18. Keep in mind, fair value is 15. The NASDAQ has an average PE ratio right now of 23. So certainly all of the fundamentals point to the stock market dropping from here. The question now becomes, are people going to remain cool and level-headed? Are they going to be patient, wait for this pause to play out, and then start buying stocks again? Or are people going to panic, and are they going to start selling in mass, afraid of stocks continuing to go down, and then that fear of stocks going down causes more selling, the selling causes stocks to go down, which causes more selling, it just builds upon itself. So that's the question, and we don't know. We're going to find out. Now, one thing I did find very interesting is Warren Buffett says that when everybody's fearful, you should be greedy, and when everybody's greedy, you should be fearful. What's very interesting is even last week, Meet Kevin did a poll on his Twitter asking people if they thought that we were in a relief rally, a bear market relief rally, that would end and eventually we'd get back down to a new 52-week low, or if we were in a new bull run and we were on our way to new 52-week highs. And at the time last week, when Meet Kevin did his poll, about 60% of the people who responded, mainly retail investors, said that we were in a bear market rally, that the rally was going to end and we get back down to a 52-week low. Clearly, it still shows quite a bit of fear on the market. Then I did a very similar poll yesterday. And in yesterday's poll, 65% of respondents said we were in a new bull run, that we were going to get back to a new 52-week high. Only 35% said that we were in a bear market rally. What a change in just 1 week. There are more people who think we are in a bull run heading back to new 52-week highs than there are who think we are still in a bear market. And that could be enough to cause enough greed in the markets to end this bull run. For large institutions to take Warren Buffett's advice, to be fearful, to start selling, and to trigger a sell-off in the markets. I believe that with more and more people becoming bullish in this market, with more and more people believing we are in a massive bull run, we're going to get back to new 52-week highs, that actually lends more credence to a bear market rally that's about to end. Now, I can't predict the future. If you guys have been watching this channel for any amount of time, you know that. I get it wrong a lot. So today, I just want to give you the facts. I just want to let you know what the two schools of thoughts are. I want to let you know why some people think we're getting to a new 52-week high and why some people think we're getting to a new 52-week low. Clearly, the market is at a threshold, and what happens over the next week or two is going to determine where the market goes for the next couple of months. So pay very careful attention to the next week or two, and don't be super bullish or super bearish. I would just take a neutral standpoint and let's just see where the market goes. If the market trades flat, there's a real good chance we're getting into a new 52-week high. If the market starts to sell off, there's a real good chance we're getting to a new 52-week low. There's a massive fight right now between bulls and bears, and the next 2 weeks are going to determine who wins. Now, I do want to let you know that regardless of what happens in the short term, in the long term, there's a lot of money to be made by investing in value stocks. And tomorrow is going to officially kickstart the Millionaire Club Challenge. To give you a quick recap, we're starting with $2,000. Every 2 weeks, we're going to be adding $200 to that portfolio. Could also add $100 per week, whatever's easier. I chose that dollar amount because we end up at $5,200 invested every single year. That is just below the threshold for a Roth IRA. So if you wanted to do this investment challenge in a Roth IRA, you could. Based upon the returns that Warren Buffett was able to generate in his first 10 to 15 years investing in value stocks, we will become a millionaire in the next 10 to 15 years doing this Millionaire Club Challenge. Now, we are going to be adjusting it a little bit from how Warren Buffett invests. Warren Buffett never sells stocks. We are going to be taking a John Templeton approach. John Templeton also became a billionaire in the stock market. And John Templeton's approach was almost identical to Warren Buffett's. The only slight difference is he actually sold stocks once they got back up to fair value and then used that money to buy more stocks that were at that time undervalued. So that's what we're going to be doing. And our average hold time is probably going to be around 4 years. And then we are going to be able to, hopefully in the next 10 to 15 years, become millionaires. And once the portfolio gets to $1 million, we'll end the challenge. I will be with you for the next 10 to 15 years doing this challenge. Even if I decide to, I don't know, retire or whatever, live my life in the Bahamas, I will still upload a video every 2 weeks for you guys so that we can keep up to date and I can get you all to become millionaires. Now, that challenge is going to start tomorrow. The first video for that challenge will be uploaded on Saturday. So the first actual video will be uploaded Saturday. If you want to know what I'm buying in that challenge on Friday, because I will be buying on Friday, all you have to do is follow me on Twitter. Again, the challenge is completely free. You don't have to sign up for my Discord. You don't have to pay anything. The entire challenge is completely and totally free. It will be done on YouTube, and all of the stocks I'm buying will be posted a day earlier on Friday on Twitter. You can follow me on Twitter at twitter.com/realscottcurry. That's twitter.com/realscottcurry. And if you don't already have an account opened for this Millionaire Club Challenge, I would suggest Moomoo. They're giving away up to 13 free stocks right now. That is good through the end of this month. So you only have a few days left to sign up for Moomoo and get up to 13 free stocks. You do have to use my link in the description below in order to do that, though. You do have to deposit at least $100 in order to get those free stocks. You can also sign up for Webull, which is giving you up to 12 free stocks. Again, $100 minimum deposit, and you have to use my link in the description below to take advantage of that. Or you could just do what some people are doing and sign up for both, and then you get up to 25 free stocks, which is absolutely incredible. Either way, I just want to give you a few free stocks because those free stocks are going to give you a tremendous jump start to becoming a millionaire. It's essentially an automatic 5% to 10% gain in your portfolio right off the bat, which is incredible in helping you get to that millionaire status a lot faster. Alright guys, I hope you enjoyed the video. I hope you got a lot out of it. Don't forget to hit the like button and subscribe. If you're on YouTube, click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you on Saturday.